I said the last time, the first thing you need to understand when it comes to before even mark your directional bias is market structure. I said market structure is very important. And then for you to consider taking a buy or a sell, you need to like read what market is printing. What market is let me what market is currently doing at the moment, how it's approaching
Yeah.
price and how its market is moving. Is it moving efficiently? When I say efficient, is it structure being respected? That means if market wants to buy, it will buy off, make a higher highs, then come back and make a lower low, lower high, then continue pushing up. In the process of making that higher high and then higher low, market tends towards to come into any supply zone to keep selling. For a bullish market tends to come to a demand zone to keep buying. If for markets to go back, let's say if market really wants to buy off, it cannot just buy from here just to go all the way like this. You know that if market do make this kind of movement without retracing back, just know that market has to what is looking for any supply zone to say what aggressively. Because if market
Mm-hmm.
really wants to buy, it will show you a sign that it really wants to buy. So if market wants to maintain this current bullish structure, it has to fall to any supply zone that will push market continue. That means it correct this impulsive move and what tapped into any demand zone. You're expecting the buys to come from demand zone, not a liquidity full. That's what we talked about. Liquidity full, like this one. Look at what happened right here on gold. Look at this movement from here to this zone.
Mm-hmm.
Mm. Look at the rally. You see, if market really want to buy, it doesn't just go something like that. It will buy, it will
Mm-hmm.
come at to any supply zone, tap into that supply zone and keep buying. But you see this rally, although it's news that caused this one, but it's defined what movement. It hasn't just
Mm-hmm.
happened randomly. It was defined just because for markets to grab what orders and then continue in correct directions. So a lot of us, like a lot of traders will see, okay, market is bullish now because you see these aggressive candles. Then you just expect, okay, market is bullish. We're still going to continue buying. This is not how market prints when it wants to sell, when it wants to buy. Market, if market wants to buy, it should respect structures. If you have a higher high, market should come and give you a higher low. That's at
Yeah.
least it need to give you two structures that to confirm market is bullish or bearish. So, but if you look for the bigger picture, look at what happened when market is selling. Market is selling, but it doesn't like sell all the way at once. See what is happening. After it tapped into this key level, we talked about what key level is, higher time frame key level. Market give you
Mm-hmm.
what structural shift, give you liquidity, and then tapped into the point of interest and sold down. Break another structure, give you liquidity, tap into this point of interest and sold down. Break another structure, give you liquidity, tap into point of interest and sold down. All these things, even if you did not
Mm-hmm.
catch any of this move, the first thing I say you're going to do is what? Read this structure, what market has been doing. If market wants to buy, is buying.
Mm-hmm.
Look for the structures market is making. Let's say you did not see this first one and you did not see the second one, you did not see this third one. So you know that based on what you can see, what market has been presenting you at the moment, you know that definitely market is
Mm-hmm.
printing a bearish structure and respecting what structures. What I mean is efficient respecting structure is market breakdown, give you liquidity. So let's say market did not come and take out this liquidity and started selling down. So even if for markets to continue selling down, it should come and take out liquidity, grab any order, either this POI or this one, and continue selling down. And that
Yeah.
does not make the market is bearish. Let me explain. Let's say market taps into a demand zone, give us structural shifts,
Mm-hmm.
liquidity, and then taps into this first one, right? And give us another
Mm-hmm.
structural shift, liquidity, and then just give you another what? Structure shift, then liquidity. So now, if you see that, if you say, okay, let me read the structure, what market's doing now currently, you have what? Structure shift. Market give you a liquidity here. So it respect the first structure, sell down. And then you read the structure again. Okay, what's happening next? You see another structural shift. Market give you a what? A liquidity. And then market has not tapped into any of these zones and just sold down. So you know that these two zones, you know that there's zone for markets to tap into if this sales should continue. Market has not tapped into it. So this rally down, you should not just be looking for sales at any random. Okay, I have another structural shift, so let me look for inducement, and then I'll set the market from here. This is not efficient. Market is not efficient, and this your structure is not going to be going to get respected. Why? Because you have an imbalance here. For markets to maintain this current pattern, it should come and mitigate any of these zones. And it hasn't, especially if it's a high time frame, 1 hour, 3 hour, or 4 hour time frame. You have these zones. Market has not taken liquidity. There's something we call an order flow. An order flow is, I'm going to explain. Let me just try to finish this one so that I'll try and explain what an order flow is. Because everything is like an order flow, how orders are being transferred from buyers to sellers. So we have two unmitigated zones. We have this one, we have this one. What are we going to be looking for? You have an inefficiency up there. Why would you look for sales there? Even for markets to maintain this structure, we know that we're not just going to have this was massive sell from here to here, and you expect continuation of the sell out there. That's why looking at higher time frame matters. And then this is what I meant when I said a range matters. You know, this range, market has not come to this supply zone, which is the cheapest zone for markets to buy from. And it's a balanced zone. What would you be looking for is sell at a what? Discount zone again. There's something psychologically like looking for sales. I say in a bullish market, you should look to buy at a discount and look to sell at a what? Premium. Same thing when it comes to market structure. Same thing when it comes to what? Bearish market. You look to sell at premium and you look to buy at discount. Just for you not to avoid, not to what? Trend against the markets, to counter trend. Then you should not be looking for buys, but you know that you'll be expecting sales to come from a premium. Look at what happened here. After we got this, let me just delete all this. Look at this. You see, market has been bullish for some time now, right? But we know that it's in a correction move. We talked about that, right?
Yeah.
So we say we expect a structural shift to happen when market taps into a higher time frame demand zone or supply zone. We know that specifically market is bearish, but we can be bullish for some times, then we could keep selling down. So when market taps into this breakup block from the higher time frame, then we expect our structural shift, which is about our reversal patterns to form at that zone, right? Then we scale down to time frame that we can read structure clearly. It doesn't have to be higher time frame. If you can read the structure very perfectly in 15 minutes or 1 hour is good. But how do we know a low, a valid low that we expect to checking out? We read the structure. If we have a high and a low, a high and then a low, a high, where do we expect structure to happen?
The most recent low.
Your recent low. That means this low.
When price take out the most recent low, yes.
Yeah. So if say this low did not take out this high, we don't consider this as a low. We'll be expecting structural shifts to happen right here, right?
Yes.
There are two ways I said we can mark a what? Breakup structures. We can mark a breakup structure using a complete body, full body. But I said, if you remember, I said in higher time frame, we expect a what? A structural shift to happen in two ways, either with a complete body or a what? A week. But in lower time frame, it cannot be with a week. Do you understand what I mean?
Yes, I understand. Since on the higher time frame, the candles on the higher time frame represent several candles on the lower time frame.
Yes, that's
so
why
on the lower time frame, even though it can be a week, it could still be a full body close on the lower time frame, right?
Yes, it must be into its lower time frame. If I'm talking about lower time frame, I'm talking about 15 minutes, 5 minutes time frame.
Yeah,
to
full
consider,
body.
yes, unless your structure is on that same time frame. You're trading the same time frame, 5 minute time frame. You're trading only 5 minute time frame. You're not trading high time frame. For example, if a higher time frame give you structure shifts, and then from there, from those, let's say a higher time frame give you what? Structure shifts. And then let's say you induce may mitigate this zone, you expect markets to come back to this zone. So if market tapped into this zone, you know that, okay, for your high time frame, this is a valid zone to sell from. If you're trading, if you
Yeah.
what, you don't want to go to lower time frame to look for your confirmation, because even this one is a confirmation in higher time frame. Because if you look for the daily, this is 4 hours. So that means your 4 hours is a confirmation because you wait for structural shift to happen. That's a type of confirmation, right? So I can sell
Yeah.
using that same time frame, which is the 4 hour time frame, and sell down, or I can wait for 5 minutes structure to form inside that my zone. That's how I used confirmation entry. It's not really
Okay.
like confirmation because already market gave you confirmation, because you might miss this move. You waiting for another 5 minutes structure to form. You might miss the move. But I use that 5 minutes for me to maximize my risk to reward. If for me to sell
Okay.
from, yeah,
Yes. Okay. Continue.
if for me to sell
Uh,
from here,
sorry. Continue. I'll
and
ask my question
I
after.
target this low now. You see, this is 1 to 6R. But for me now, this move for higher time frame is going to be a very big move in lower time frame. I can get like 1 to 16 or 1 to 20R. So this is the only
Yeah.
reason why I had to scale down to lower time frame to look for structures in lower time frame, because this OB now, this, let's say this is 1 hour. So this 1 hour OB now, this 1 hour OB now, inside this 1 hour OB, you find 15-minute OB, you find 5-minute OB, sometimes you find even 3-minute OB, and that will shrink the OB back to very small one. You use the most smallest one, let's say the 5-minute. You see, instead of to have that
Yeah.
1 to 3, now you're getting 1 to 11.
Yeah. Yeah. I understand.
This is what I mean. So you see, when you have this structural shift in the higher time frame, when market tapped into this zone, you say, okay, you marked your breakup structure to the upside first. We mark this as a breakup
Mm-hmm.
structure. Then we look at the low that caused this breakup structure, which is what? This low. This is the low that caused the breakup structure. This is the what?
Yeah.
Yeah, this is the swing low. It's the strong low because it broke
Mm-hmm.
structure to the upside. This is why we expect structural shift to happen. If market did not break this structure, we don't have structural shift, because this is the last
Mm.
valid low that caused the breakup structure to the
Low
upside.
electoral business structure.
Yeah. So this is why we expect structural shift to happen. Then we marked the low and expect markets to come and take it out. Then from there,
Yeah.
then we
Okay.
can, okay, we have structural shift. Then we look for other confluences. Can be liquidity. We use for liquidity, and then our what? Point of interest, unmitigated point of interest.
Mm-hmm.
So I said I'm going to explain an order blow, right? But then let me finish. So you see,
Yeah.
inside this zone, inside this 1 hour OB, we can have many types of different OBs. This is a 1 hour OB. So if you go to lower time frame, let's go to 30-minute time frame. We find the same OB. Okay. So this is 30-minute time frame. You see, in the 30-minute time frame, instead of that OB, it's a breaker block there. We have a breaker block inside the OB. So you see, but in 1 hour time frame, it's an OB. Do you understand? So based on what we see, based on what we know, after breakup structure, we use the POI that is closest to our liquidity. But in 1 hour,
Yeah.
the POI that is closest to our liquidity in the 1 hour time frame, why is this on? In the 1 hour time frame is mitigated, because this is our 1
Has
hour.
been mitigated.
This is our
Yeah.
one.
So it's not more valid.
This is our 1 hour time frame. You know, it's mitigated when market is trying to create our liquidity. It mitigates the 1 hour time frame. So in 1 hour time frame, know that this is definitely invalid. But if we go to lower time frame, the 30-minute time frame is the same zone, but it has not been mitigated. So instead to cover all of these things for our 1 hour time frame as our what? As our order block, that's why we go down to lower time frame. We look at different structures there. Then you see in lower time frame, we have a breaker block instead of the order block.
Mm-hmm.
So if for me to take myself from there, I'll use the 30 minutes time frame and then my stop loss above this breaker block. You know how we talked about how you can place your stop loss, right? You've placed your stop loss from where what invalidation zones where you expect this your setup to be invalid. For my this setup to be invalid, market has to take out this order block, breaker block there. The candle of the order block. If market take out this candle, that means this setup is invalid for me. So this is my invalidation zone. Your stop loss should be at your invalidation zone. Then your take profit should be your higher time frame draw liquidity, where market is targeting in the higher time frame. So you see, let's say I only marked the first low, this low. I target this low. So instead for me now to get lower risk, you see, this is 1 to 13R using the lower time frame, right? But if I use the 1 hour time frame, it's going to be like 1 to 3 or 1 to 4R. Let me try. So for me to use the lower time frame, I said for higher time frame, I have to place my order, my stop loss in an invalidation zone. Why is my invalidation zone? This week of the what? Order.
Yeah.
Right?
Yes.
So you see, this is 1 hour time frame, and you see this is only 1 to 5. So this is the only reason why I use higher time frame and then lower time frame inside that high time frame. Sometimes I say you might miss if you say you're going to wait for that high time frame. You just look for the structures. So inside your zone, look for a valid structure. Let's say, let me go to like 5 minutes inside that my zone and see if I could find a zone that can be missed when I say I'm going to wait for that zone to go mitigate it. You see, for 5 minutes, you see these zones, there's not much clear. It's only the order block that is clear.
Yeah.
It's only the order block that is clear. So if I mark the order block and say, okay, let me wait for markets to come to that order block so that I can have maximum risk to rewards, I might miss this setup. You see, market has not come to that order block. But it's my invalidation area in what? In higher time frame, which is my 1 hour. So you see, you have to go to a lower time frame that is much more convenient. Lower time frame that the structure is much more valid.
More clearer.
Yeah, then you look for your sales from there. That means okay, this is 15-minute time frame. You see, even if the 15-minute time frame is kind of much more clear, the breaker block, this is a 3-candle formation. We talked about 3-candle formation, right? It's one of the types of order block or breaker block that we use, and it's kind of powerful. So you see, in the 15-minute time frame, you have a valid zone. That means in 5 minutes you don't have. Sometimes you have a clean zone in the 5-minute time frame. That means you can have a maximum risk reward. That's why sometimes you see people posting their trades. They have been at like a very small SL, and then they have a lot of like risk reward. So it's because of that lower time frame refinement zones. Like you refine that your lower time frame structures to a suitable one just to maximize your risk reward. We're not really doing it for us to have what? Another extra confirmation. What extra confirmation do you need? If higher time frame is telling you the same thing.
I understand.
We use for confirmation if you wanted it to lower time frame, but daily is telling you that okay, this is the valid zone to sell. 4 hours is telling you it's a valid zone. They're like you have 2 different time frame telling you what? One thing. If higher time frame is telling you things, that does not mean lower time frame you have to go against because you have lower time frame structure. What I mean by that, if I have a structural shift in lower time, is in higher time frame. I have a structural shift in higher time frame. Something like this. But in lower time frame, market is bullish. That does not mean it's going to maintain this bullish structure because higher time frame already told me, okay, market is what? Bearish. So now all of this thought, I'm not going to believe in all these lower time frame structures because higher time frame is telling me otherwise. So if higher time frame is telling me something, I cannot just stick to lower time frame. Do you know what I meant?
Yes, I understand.
So even this movement in lower time frame, that does not mean it's going to affect the higher time frame. Because it's bullish, that does not mean it's going to change the market to bullish. So that means if you have a higher time frame, a lower time frame, and higher time frame is telling you something, you stick to the higher time frame. You're only going to use the lower time frame to find your higher time frame POIs. So this is the only reason why I use lower time frame. If I said I'm have to wait for confirmations to happen at this zone when market tapped into this breakup block, the market just when I said I'm going to wait for another extra confirmation at this zone, I might miss this sell. So that means if you have a 4-hour POI, you can refine it to 1 hour or 30 minutes. Any time frame lower than that, you just know that you can either miss the setup or what. Yeah, definitely going to miss the setup. If you say you want to wait for another structure inside the lower time frame structures. So if you have a 4-hour, use 1 hour or 30 minutes or 15 minutes. Don't go lower than that unless you have a clear zones. Let's say in 30 minutes now, you see in 30 minutes, I have this breakup block. And then in 15 minutes also I have this breakup block. That means I have 2 time frames telling me the same thing. So if I go to 5 minutes, let's say I got 5 minutes. So I might find a zone inside these 5 minutes. Let's say I find a order block inside these 5 minutes, somewhere around this zone. So you know that it's an order block in that 5 minutes, but inside that my 15-minute and 30-minute structures. So I can use that 5 minutes because it's inside these 2 zones and it can help me maximize my risk to reward. Even for me to use to cover all these breakup block now. That's about I think about 10 to 15 pips. So if for me, let's say to cover all of these trail line, all of these order block, all these breakup block, so I can use that 5 minutes order block that's about half the size of that one and sell. But just know that you might have the risk of missing the trade. So the same thing, you said?
No, I just said okay.
Okay. So the same thing.
I wanted to ask.
All right.
No, if it's okay, I can ask after you finish explaining.
Okay, you said the first thing you see, market respect the first structure. Okay, then you like I said, if you remember on my TikTok, I posted a video. I said if you're a beginner, when market give you first structure shift, you don't consider it. Like you don't trade it because this one has much more risk of failing than the second one. Because not every structure or not every trader can spot the first one self. Though there's a lot of traders that took this sell, even myself, I took the sell. But for you now, you have to wait for the current 2 structures to be taken out. I said when market is bullish, the moment market shifted structure to bearish, right? Market only break the current low on the structure. The current low of the last structure, right? But for you to confirm market is really wanting to sell, you have to wait for 2 structures to go broken. That means the old structure go burn, low of any of this structure go taken out, and then the low of current structure. Let's say market give you like inducement and tapped into this zone for your pair sales to come from. So
all right, so you're saying one break of structure doesn't confirm anything. It's good to have.
Yeah, it's gonna confirm, but it's gonna be a very risky.
Yeah, it's going to be very, very risky. So to have a more secure, to have more insurance, it's better if you see kind of like a double break of structure pattern.
Yes, that's the reason why I said a double break of structure is because it broke 2 different structures. The current structure, the low got broken out, and then the last structure, a low again got broken out. That means this market confirm you that okay, this is currently structure shift. Sometimes it's gonna be a liquidity full like this one. Market will break one structure and then it will not respect this one. It will just keep buying. So that means taking your sell at the first one, it does not mean even investors, because it's not only one people that's trading the market.
Yeah.
All of this small money is not one people, and they're not like combining themselves. Okay, let's talk about together, and then we target only the retail traders. They're targeting themselves too. It's not only one. The people that sold there, people saw the structure shifts. Okay, some investors sell from there, and some investors did not see the structure shift and just buy from there. So you see, there's going to be a lot of manipulation at these zones until the market confirms that it's shifted structures. What I meant by is, let's say investor A saw the structural shift there, but investor B saw an order block there, and then consider all of this
Mm-hmm.
low as liquidity. Market take out the liquidity. Investor A will be waiting to sell from there, and investor B is buying from there.
Ready
You
to
see,
buy.
this
Yeah.
this this buying is what caused to tap into this supply zone of investor A to sell from there. But investor B
Mm-hmm.
notice, okay, this is a very valid zone to buy from, and it's going to target this high. So you see, it's going to be this a lot of fighting between these two buyers and sellers. And when one of them wins, let's say investor B wins and take out this one. So you know that, okay, market confirming that it doesn't want to sell and continue selling down. But if market broke this low now, so investor A know that, okay, market is definitely bearish because of what he saw, and investor B lose money and he sees, okay, this is on did not hold. So then he'll be looking for continuation of sales. So because of that, that I say the first structure that's going to form is very risky to trade, because especially if you can't read structure very well. Market will give you that structure shift and continue buying. This is not the first time it's doing that. But for you to confirm it, you have to wait for two structures to get broken. The current structure of the market, this current structure the market is printing and is selling down, and then the structure the market previously printed. Do you understand?
Yeah, I understand.
Okay, then you look for your second. That means you have much more insights of what markets actually wants to do. Market really want to sell. That means for you to look for your two structures, which is double breakup structure. This is the structure
Mm-hmm.
low of the current structure, right?
Mm-hmm.
And then this is the low of the what? Previous structure. That means this is a what? Double breakup structure. So see, this confirms you that, okay, markets definitely want to sell. Then you mark for your structures, your liquidity as your first pullback, and then your point of interest, these three candle formations with a block. Then you
Mm-hmm.
sell. And then the next thing, what? You want to see markets take out the last low of this structure.
Yeah. Oh.
Because the
Mm-hmm.
purpose of this high, this swing high, the job is to take
Mm-hmm.
out the swing low.
Mm-hmm.
So if market could not do that, we know that definitely this is going to be a inducement, and market might come back
Yeah.
and use this OB right here. Do you understand?
Yeah.
So if we have this zone, and we have to see market take out this low to confirm that, okay, this is a strong high. But if it couldn't, let's say it come and respect it and started buying, that does not mean our current trend is bullish now. It just means that
Yeah.
this low could not do a job. Now it's going to be a liquidity. So if we have any POI that is closest to that zone, we use it and sell down again. Unless the market take out this high, we know that we don't have another structural shift. This high, because this is the high that caused this structural shift, break this low, and then break this low. So unless market take out this low, we're not bullish again. We're still bearish. So we can go with this extreme zone if this zone couldn't hold. And the only reason that why this zone couldn't hold is if it couldn't take out this low. Do you guys understand?
Yeah, I understand.
So you see,
But from what?
the first thing, if you marked your structure, the high that broke this structure, you know that is your invalidation zone. Unless market take out this high, you don't have another structure shift. So that means you have two POIs you can work with. This order block and this breaker block. But if markets, let's say, use this breaker block and then broke structure to the downside, that means this will become your invalidation zone again. This high now will become your invalidation zone. Anything that will take market beyond, above this high, is going to be structure shift. Do you guys understand?
Yes, I understand.
So you see,
But
because
Mr. Zax,
yeah,
you see that particular low, that high didn't take out the low, right? Because there's another high in front that finally gave us the low. That finally gave us the new low. Yeah, I
which
don't
one?
know if I'm mistaken.
Which one?
Where you put the second black arrow down,
This
that
one.
particular high, it didn't take out our low, our current
It did
that
not take out the
particular
low.
low. Yeah.
That's why I
Yeah.
said the range. This is your working range. This is your leg, your working range. If you have a breakout structure, the high and the low of this current structure, these are the swing high. These are the major high and low. It's your range.
The major high, low. So that's what has to be, if we need to have an uptrend, the high has to be taken out so we have a
Yes,
structure shift.
yes,
If
yes. That
we need to have a continuation trend, the low has to be taken out so we can
yes.
get a
Yes,
continuation trend to the downside.
that's your working range. That's your working range. These two range are what you want to consider. The same thing when it happened from here. These are the two range you have to consider. This your high,
Mm-hmm.
and then this
Mm-hmm.
your low. These are the two range.
Mm-hmm.
You want to consider these two range. Any one of them that go broken out, this is your range. Any one that go broken out is going to be a structural shift. If this high market come back and take out this high now, it broke your what? A major high. That means
Major high.
your zone,
Or have a structure shift.
yes, is invalid. Same thing if it broke this low again. So the first thing I say you're going to do is you know your range. So you're trading in these two range, this high and then this low. You can be trading inside this, but you have to know that this is your external range. I can try to sell the market from here. Let's say I'm trying to sell the market from here. I can still take it out. I got taken out. That does not mean market is bearish because we're still trading inside the range. That's when you have to understand how to look for range. We're trading inside this higher time frame range, which is our this high, swing high, and this swing low. So based on this move, then we look for range where we expect a forcible continuation to buy from because we're trading this range. Let me explain. If we have a high, so you see now, based on what we can see here, we have two range. We have two range to work with, this high and then this low. We have structural shifts. That means market tell us, okay, it's definitely was shifting structure from bullish to bearish. So this is the range that we're going to trade with. This is the range that we're going to trade with. And this is our invalidation point. We're going to trade inside this range. We expect markets to pull back inside this range. Can pull back to 10 or 70%, 60%, 50%, or 100% for us to continue down. But we know that definitely this is our invalidation zone. So if for me to take a sell from here, let's say I see an order block in here. I see an order block in here. I take my sell from that zone. So I have to know that this is my invalidation zone. Markets to tell me, okay, market is definitely bullish now. This is my invalidation zone. Until market take out this high, I'm not going to look for sales. We'll look for buys. So this is my invalidation zone. So my stop loss should be at the invalidation zone. And then I will target any draw liquidity. Same thing here. If I sell the market from here, so for me to know that, okay, definitely we turn bullish, my stop loss should be above this high because this is my invalidation zone. And then I will target any zone. I cannot just use to cover only this liquidity until I know what I'm doing. This is my invalidation zone. If for me to, okay, let me just take this sale until market prove me otherwise. That means until market is now bullish, I'll take this sale. So that means I must cover this high because this is my invalidation zone. So I can cover that high anywhere I sold. That means I'm selling at the middle of this range. Do you understand?
Yeah, I understand.
I'm selling at the middle of this range. That means for me to, if I'm trading so that market is only going to take me out if it's turned bullish, that means my stop loss should be above this invalidation zone. So that's why range matters. So inside this range now, we know that we have this range to work with. So since we have this range to work with, we can still look for that same structure inside the range to take our sales from. That means we have to look for premium zones and then discount zone. If I sell from here, it's 50%. It's still what? Discount. For me to sell market at this zone is very risky because it's very discount. It's very cheap. Price is cheaper at this zone. Price is cheaper at this zone. And even if you look at that zone, there's no liquidity to be taken out. Why would I be looking for sales at these zones? Because I have this big range to sell the market from. That's why some people that only trade the supply and demand, they have to wait for markets to come to any demand zone here and then sell from
before they enter.
Before they enter. Because they what trading the range. psychological range. So you have to know this. You have to look for how to mark your range. You have to look because you have big range to work with. This high and this low is a big range. So what would you be selling earlier instead to look for buys myself? Counter trend, which is very risky. So you have to go to the extreme range. If you have structure that you trade, fair value gap or your SLP structure, then you look for the structure at that premium range. These are the zone that we expect to sell at premium and buy at discount. So in that range, when market taps into this zone, we know that current is what is bearish. And then the target is market to take out this low, right? To validate this our structure. And there's our invalidation zone. So since market is coming, selling from that zone, we can look for the same structures. We can look for the same structures, our high time frame, our trading structures, what break up a low, and then liquidity, and then point of interest. We have 2 points of interest. We have the breakout block and then the other block. We can still look for that and keep selling. We know that definitely we were selling from a premium zone. That is a very good sign. We're following the trend because inside this range, we do not sell at discount. We sell at the premium zones. So, and then we use that with the confluence of our structure confluence, our trading structures. We saw that present at the moment. If it doesn't, we're still selling from a discount from a what? Premium zone, which is a very good zone to sell market from. Do you understand?
Yeah, I understand.
Okay, I'm gonna have to send another link. I think this one expired, so that we continue.
All right.
There's more to talk about. I want this class to be very detailed class actually. So
okay, no problem.